Well, thanks for tuning in to Bloomberg Quint. If you are an avid watcher of the equity markets and wondering what this quarter could do, whether there will be a GST-led disruption or will companies surprise the way they did at the end of the demonetization quarter, I think we'll try and get you some answers. I'm Neeraj Shah, with me is Darshan Mehta, Head of Research. Darshan, promises to be an exciting quarter, kick-starting today with TCS.
It will. IndusInd came out with a fairly inline set of numbers, but today the big game happens because today's TCS, tomorrow's Infosys, and you know that IT is not doing well and they are the bellwethers. So let's see how this earning season kicks off.
Yes, so the top think tank of none other than Citi India, the research team, the head of research are with us in our studios to talk about how the quarter could look like. Surendra Goyal, Prashant Nair, Saurabh Handa and Aditya Mathur. Gentlemen, such a pleasure having all of you. Thank you so much for taking the time out and being with us in our studios. Surendra, let's start off with you. Your base case is that it won't be a pleasant quarter for earnings. Where is it that there is the remote likelihood of a surprise that comes in? And two, will the focus be more on commentary from companies? Because I also read in your report that this will be transient in nature. While there could be pain, it will be short-lived.
Okay, so first of all, thanks for having all of us on your show. So in terms of the quarter, what we are expecting is a 12% decline in earnings YOY for all the companies under Citi's coverage here in India. Now, you see there are quite a few things, okay, impacting this quarter. You have the whole GST related disruption. Like I think as you rightly mentioned, it is transient in nature. There was destocking. And we should see restocking as we go forward. But clearly from a quarterly perspective, there are multiple sectors, consumer related, even in pharmaceuticals, multiple sectors where you are actually seeing an impact of that play out. The other thing to keep in mind is you also have certain sectors which have very sector specific challenges, right? And oil and gas, like again, Saurabh is here and he can talk about it in detail. But from a quarterly perspective, lower GRMs, inventory losses, etc., they are pulling down numbers. Similarly, in IT services, again, not to really that extent, you really don't have a big decline per se.
Right.
But this is a sector which we have been used to in the past that, okay, fine, this will grow at 10-15% comfortably. Now, suddenly you have a situation where that is not growing. Telecom, although it's a small sector, but clearly given the competitive intensity, etc., the swing in profits YOY is very significant. And then the third thing to keep in mind is there was a good base effect last few quarters, particularly on the materials and to some extent on the financial side, and that is kind of wearing away.
Right.
So if you kind of combine all this, that is what results in the 12% decline expectations. Now, second part of your question, what can surprise positively? I think GST disruption is not easy to model, right? It's like one of a kind disruption, and I think there is always a risk that you could be too optimistic, you could be too pessimistic, because even when we were talking to corporates going into the quarter, at times even they were not sure of how to quantify this. Everybody said that, yeah, there will be a disruption, but nobody knew what is the quantum of disruption.
Yeah, but you guys went through a similar situation during the demon quarter as well, right?
Yeah, so I think it's a little different, okay, because here you knew this was coming. So to that extent you were prepared for it. So clearly in that context it's quite different. Okay, but having said that, this kind of changes which happen once in, those kind of changes are very difficult to quantify, and that is where you could always have things turning up a little better or a little worse. And I think if you're looking at surprises, you will also have to keep in mind that there are some sectors which could have already underperformed, like oil marketing companies are a case in point. They've already underperformed a bit, and to that extent, if numbers are a little better, you could actually see the stocks rally.
Yeah. But you know, we had demonetization. You've seen that the last 4 quarters haven't been that bad. Okay, I'm seeing the statistics that you've come out with your report. Is GST such a big event that you would see a probably, how big of an impact do you think that GST will have? Because a 12% degrowth, obviously if you take out oil and gas, you would say probably 4 to 5%. Yeah. But is GST such a big impact that, you know, there will be a degrowth? Because everyone spoke that, you know, post demonetization, there will be a big degrowth that will happen. And that didn't happen. In fact, there was growth. And in fact, the last quarter was one of the best quarters that we've had in the recent past.
Yeah, so I think you really have to break down the numbers sectorally to get an answer to that. If you look at last couple of quarters, materials had a super low base the prior year. Okay. Right? And if you look at numbers X materials, for example, or X materials, X financials, you'll see a very different picture. Okay, so while what we are saying is, yes, there will be a GST impact, it is transient, but kind of attributing everything to GST is not the right way to look at it, and that's the reason I mentioned 3 very clear points in terms of base effect wearing off.
Okay.
Some sectors going through some kind of challenges. Again, challenges are very sector specific. You will have to look at it all together. Attributing it purely to GST is wrong. And on your other question around demonetization, I think post that we saw a couple of quarters where, say, the metal stocks, because of a very low base, had a huge swing in profits. If you look at the numbers ex metals, they'll paint a slightly different kind of a picture.
Okay. But do you think that markets in general are ignoring earnings? Because, you know, earnings have not picked up yet. Last quarter was a slightly decent quarter, but markets are at record highs. Do you think that, you know, the street has learned to ignore, you know, the near term growth, and probably they're looking at some other maybe 2 years down the line, 3 years down the line? So are earnings being ignored totally?
Yeah. So my take on that would be, you have to look at a couple of things here. Okay. Firstly, liquidity continues to be very strong. We are in a market where FII flows have been very strong year to date, and at the same time domestic flows last couple of years have continued to be strong, and post demonetization it's actually done a little better.
Yes.
So you are in a market where there is huge liquidity support, and in that kind of a market, in the short term, you could always have a situation where earnings are not keeping pace, but because fund managers have so much money to deploy, the markets get supported.
Sure.
Right? Maybe like on a relative basis, whatever has visible and consistent growth, the multiples are in some cases getting more difficult to justify. So we are seeing that clearly happening.
Okay.
Okay. So I think liquidity is one thing which you definitely need to keep in mind. And secondly, yes, what you are saying is partly I would agree that when there is an impact of a transient kind of impact on earnings, then people tend to look through. Okay. So GST related disruption, will people be very worried about it? I don't think that will be the case unless the impact lasts for longer, or the impact is a lot more than what people anticipate. If those two things don't happen, then I think the market will see through it, because yeah, fine, it was known you will have an impact has happened, maybe the market moves on to FY19 earnings, and you really don't worry as much about FY18. So I think you'll have to keep those two things in mind, transient nature of a part of this impact, and secondly liquidity, which has been, and again it's not only India. Like you look at MSCI emerging markets, I think they are up some 18-19% year to date. India is up 21%. So while we kind of always talk about India, what is happening is very regional in nature. Emerging markets are generally doing well, and that is also reflected in what India has done this year.
True. And well, but having said that, since it's a earnings curtain raiser, I think it's important to talk about what the numbers could do, and whether the numbers or whether the commentary from the managements would be of equal importance as well. So, you know, let's start off with oil and gas, and sort of what's your thought? I mean, I think your base case says that oil and gas companies could have a weak quarter. Now, one, how bad can that quarter be? Two, have the stocks priced in all the negatives, especially the OMCs, and what about upstream? How could they do?
Okay. So I think the poor performance in the quarter could come more from the downstream oil marketing companies, because the correction in crude prices will lead to some inventory losses, perhaps leading to lower refining margins as well. But if you look at their performance over the last 2-3 months, it seems to have priced that in. Fundamentally, we actually stay quite positive on the downstream oil marketing companies. We've still got buys on all three of them. We think valuations are still extremely attractive. There are certain initiatives by the government which are actually very positive, such as this move to daily pricing, which in a way I think completely delinks fuel pricing from any, you know, government sort of intervention. Fuel consumption trends in India, which had sort of weakened post demonetization earlier in the year, seem to have picked up again. So we would urge investors to look past any weakness in this quarter on the back of inventory losses as a one-off, which is what we think it is, and to look at earnings, you know, from a 1 or 2 year sustainable sort of basis. On upstream, we are still relatively less convinced, so we still relatively favor downstream over upstream. Oil prices continue to be where they are, and that which will now have an impact on the upstream companies, because with subsidies having gone away, they are now fully leveraged to oil prices. Relatively, maybe ONGC looks a tad better, because you do have,
despite the news flow, or because of the news flow?
X of the news flow. On a fundamental basis, you do have some volume growth coming there on the gas side. But we are still not very convinced, so we have a neutral on ONGC. Yes, there is the news flow on, the deal, and it will all depend on, I guess, what the valuations are, at what price it happens. But relatively, I think HPCL at 7 times still looks pretty compelling even within this sort of deal structure. The rest of the pack, I think Reliance may have a bit of a softish quarter because again, refining margins could be slightly lower. Petrochemicals could, however, be better, but Reliance, I think the focus is more on some other events which could be outside of quarterly earnings. So what's happening on Jio? Their recent annual report on Jio gave some insights as to what revenues they have been booking, and the numbers appear to be fairly decent as far as subscriber traction is concerned. But you need to remember these are still heavily discounted offerings. So
yeah,
the
they
key
just
is
raised the offers, right? If I'm not wrong.
They have
the tariffs of late, yeah.
They have a couple of days back. So the key is what's the recurring subscriber number. There's an AGM on the 21st of this month, which could provide some clues as to what their next plans are. There is talk about a 4G feature phone, which could address a huge 70% of the market, which currently does not own a smartphone. So that would be something interesting to watch out for. Their core businesses are getting monetized soon. 2 of the big projects kick in over the next 6 months. So Reliance will probably, the performance may not necessarily be linked to the quarterly performance. On the gas side, we think the quarter could actually be decent for some of the companies. For instance, the gas distribution companies benefit from a stronger rupee.
Sure.
And which could
So I just wanted to ask on Reliance, since you pointed out, a couple of years back, there was this whole hue and cry about KGD6, and suddenly no one seems to be talking about it. Is there no growth there, or is that totally off the table, and Reliance, it's just now, the core business and telecom?
Yeah, I guess in a way over the years, the definition of Reliance's core business from being upstream plus downstream has changed to largely downstream. More than 95% of earnings actually come from the downstream refining petrochemicals. Upstream does not really contribute much to earnings. And they've been through that phase of declining gas production because of technical challenges, because of low gas prices. And that's also been one of the contributors to the big derating that we've seen in the stock. Going forward, they do have plans of restarting some development projects in KGD6. But that's still a few years away. It does not really contribute a very significant chunk to our sum of parts. So the sum of parts drivers are still the downstream business, the new projects coming up, and Jio, which is telecom.
Aditya, what about, everyone's talking about GST, the impact. We have a lot of people watching us live on Facebook, and if you want to explain what this concept of destocking, which is, which all the analysts are talking about, and what impact destocking will have on this thing. So if you're explaining this to a layman, can you just explain what destocking means and what it will impact and how it will impact the margins of the FMCG companies?
And how would the companies or how would the stocks react essentially to these numbers?
Sure. So I think there's a distinction here. So while the secondary demand, which is the demand at the consumer end, the end consumer, that remains fairly stable.
Okay.
That was definitely impacted to an extent after demonetization, but that has gradually come up. The impact of destocking is essentially the link between the company and the trade.
Okay.
So with the July 1st deadline, ahead of that, a lot of the trade had destocked in the sense, in fact, the entire month of June, they had been drawing down the inventory level at their end. There were 2 things here. A, you wanted to finish off the inventory at the earlier pricing, and which was earlier before the switch over. And secondly, there was an expectation that pricing would tend to change after the whole GST rollout. So I think this is more at the trade end. While the secondary demand seems more or less okay, the primary demand, especially for companies which have a higher dependence on the wholesale channel, because as you know, a lot of these companies had been preparing for the GST rollout for a while, so their distributors were more or less okay. But when you go down the chain, especially companies which had a more rural exposure or companies which had a more wholesale exposure, there the wholesalers were just not ready with for the whole GST rollout. I think that's where the impact has been.
Okay.
I think this this angle, this whole wholesale angle is still, you're not seeing some sort of restocking that's happening even now. But
how does it impact the quarterly earnings?
So the quarterly earnings, what's happened is the month of April and May, in my view, has been relatively good for this thing, because the underlying consumption is still pretty stable.
For what set of companies, if you can define them?
This would be the normal HPC and the food and beverages companies.
Okay,
right?
all of them.
You had seen an impact, as I said, in the third quarter. The fourth quarter, you had seen some bit of restocking, you had seen some bit of secondary demand which had come in.
Sure.
That remained very stable, if not, with all the improvement that's happening in the rural, the initiatives by the government, the rural economy seemed okay.
Okay.
The month of June, the primary sales, which is essentially the sales from the companies to the distributor level, that has definitely taken a beating. So depending on the companies, the impact varies. But let's say if there was 100 rupees of sales in the month of April and May,
sure,
hypothetically in June it was probably only 50 or 60.
So just before we get to the exporters, I just want to figure out from your, and we'll come to Prashant as well on this pharma as well, but what companies do you believe will post a good earnings picture this quarter? And Surendra, if you have a view on this, you can step in.
Sure. I think good is again relative here. I definitely think there will be a slowdown that is visible, because if a full month or half a month of sales is impacted, volumes will tend to look pretty subdued. I think what I can say here is two factors here. Firstly, companies with the more wholesale exposure, say an Imami, could see worse numbers, whereas companies which have a less dependence on the wholesale channel and where their direct distribution has been high,
sure,
there you would tend to see better numbers. So say a Unilever or say Godrej for that matter.
But does this mean that second quarter will be much better, because the base on a quarter-on-quarter base will come up significantly for them?
Correct, and because you'll have that restocking impact also coming through in the second quarter, so the second quarter should tend to look up.
I think maybe second and third quarter is how I would put it, because April and May were decent months, and then we saw destocking in June, and now July again we are seeing very gradual restocking. So on a quarterly basis, it's really difficult to say if you see a big pickup this quarter itself.
Okay.
But you know that the restocking is going to happen over the next couple of quarters. Okay, so at some point in the next 2 quarters, we see that change, not necessarily the second quarter.
Yeah, I think second quarter will be impacted, because it's not like there is a little bit of a blackout at the start of July, so July may not be.
So probably third quarter, maybe you might see the real impact coming in.
I'm surprised you're not asking Prashant questions on pharma.
I'll ask him. He's waiting there patiently.
But I want to ask Surendra on IT, but let's start with pharma first.
So Prashant, pharma, I don't know what to say, because most of the counters have actually come off significantly from the highs. What's your basic? You also have written that it will be a very, very poor quarter as far as pharma is concerned. Do you think that for the next few quarters, because everyone in the annual report to the conference call has indicated that there is pricing pressure. Do you think that over the next few quarters, people will tend to stay away from pharma?
And how will the quarter be more importantly as well?
Mainly how this quarter and what will happen now?
Okay, so this quarter will be very difficult, because the GST related destocking in fact will probably hurt a lot more than what's happening in international markets. So if you look at, so here we have the advantage of say AIOCD, AVAX putting out wholesaler inventory numbers, and our sense is that companies could lose between say 20 days to 30 days of sales during the quarter. So that's practically 1/3 if you take the higher end. And those who are losing less sales are because they are giving discounts, and those discounts then come into cost in any case. So effectively, this quarter there will be a challenge. When we look back at what happened, when we transitioned to a VAT system in 2005, companies saw sales declines between 6% to 40% during that quarter, and then the recovery, as Surendra mentioned, happened over a period of the next 3 quarters. So you made up for all the lost sales, but it didn't happen immediately. So obviously India will be tough this quarter, and the challenge there is India is generally a 60% plus gross margin business.
Okay.
And you effectively have to just knock that entire thing off your EBITDA because the fixed costs are not going to go away. So to that extent, numbers will look pretty bad, even if you ignore what's happening, say, in the US in terms of pricing pressure. Now, insofar as the US is concerned, the commentary on pricing is not likely to change materially. But we possibly have come to a point where it's being used as a common stick to beat every company with, and in many companies the absence of a negative actually works very positively. So, for example, I'll give you an example. Last quarter, when Aurobindo reported, and they were one of the last companies to report.
Sure.
They reported a fairly decent quarter. It was not a great quarter, but the stock was up 10% because it had already underperformed meaningfully on the back of what others had done. So I think we'll see pharma has been a sector over the years where every stock does not move in the same direction. At any point in time, through the last 15 years, you will find there are always some companies which outperform, some do not, because it's very bottom up. Pipelines are different.
Which ones would you watch out for?
So the ones we like the most are Aurobindo. We like
on the basis of this quarter numbers? No, not necessarily.
See, on the basis of this quarter numbers, those who don't have a big exposure to India will be relatively better off.
And they have been punished, you think?
No, I don't think this time people are really that worried about destocking.
Okay.
Because, I mean, even again, when we saw what happened when we had VAT, stocks came off from Jan to April or so, and that was the March quarter which really got affected. And then all these stocks moved up very well over the following.
Yeah.
So I don't think this time people are too worried about this part of the hit. The worry is essentially about what's happening in the US, which is more structural. So to one of your earlier questions, I think markets are willing to look past earnings as long as they are transient. But wherever there's a structural pressure visible, like you've seen in pharma, we've seen stocks underperforming. So I think going forward as well, it will be very mixed. I think commentary will matter a lot more than the actual earnings number, because I don't think anyone will be able to figure out how much of the decline is due to GST, how much is due to pricing, and unless a company actually comes out and outlines in a very granular manner, it's very tough to figure that out.
True.
So commentary on pipelines is what will be most important in my view. Pricing, I think whatever management say, we don't think investors will really look beyond a weak pricing environment at this point in time. So pipeline related commentary as usual will possibly be the most important.
So you've written that there could be a potential positive surprise that could come in on Glenmark. Expectations are low anyway. They haven't done much in the last 2 quarters. In fact, last quarter was one of the worst that they had reported numbers. You're saying that there could be decent US business momentum. What are you referring to here in terms of, because they don't have any kind of blockbuster product, because ZTI didn't do well for them. In fact, it did, but they were not able to monetize it as much as they could. That could have come in the last quarter, the quarter earlier. So what are you looking for Glenmark here?
So see, this is when we talk about surprise, it's relative to what people expect. Right?
Okay.
So the fourth quarter really set expectations very low. Post the fourth quarter, so for one ZTI, my sense is that we will see a $50-60 million kind of revenue number this quarter from ZTI. So that will be a decent pickup quarter on quarter, and I don't think it's like broadly expected. They've had quite a few decent launches over the last 2 to 3 months post their plans being inspected and cleared. So Statera, for example, is a product which was expected to be very commoditized, but ultimately there were only 4 players in the market. Both Aurobindo and Glenmark seem to have got reasonable traction. And the advantage Glenmark has in a way is that it's a very small business in the US. So even 1 or 2 decent products can shift the needle meaningfully. It's in their corporate profitability, the US is one of the higher margin businesses because the delta is gross margin flowing through to EBITDA. So vis-a-vis the expectations that are there currently, we think they could surprise. They still have their challenges, which we saw in the fourth quarter.
Okay. Now a few other sectors, and Surendra, I want to take the questions to you back, and then we'll ask for some individual surprises that you guys may expect from your sectors. I think, well, we've gotten some bit of clarity on downstream, but can't not talk about the biggies that come out today and tomorrow. What do you expect from IT? What do you expect TCS and Infi to do? More importantly, what do you think about the commentary? I think the first time that we're hearing TCS after the NASSCOM guidance came out, in a manner of speaking.
Yeah. So on IT, I think what you have been seeing over a period is that there are certain challenges which these companies are going through.
Right.
So there is a large traditional or legacy business, as we call it, where there is some kind of commoditization happening, and which some of the companies have now openly called out as well.
Sure.
Right. So the challenge is that firstly, because of that, you are seeing some kind of a growth slowdown, and that is also putting pressure on operating margins. And if you take a slightly longer term picture, last 5 years or so, despite a significant rupee depreciation, we have only seen margins come down for these companies.
For all of them, yeah.
So the operating profit growth, which say a few years back used to be 20%, is kind of come down to practically 0. And that, I think, is a challenge for the sector. From this quarter's perspective, I think you just have to keep in mind that those trends in my view will continue, but this is again seasonally a better quarter. So historically, if you go back, this sector has always had a good June and September quarter and then a tough December and March quarter because of different reasons. So there is a little bit of help from seasonality, but the broader trends in terms of challenges being visible, YOY numbers on operating profits still looking challenging, I think we expect all of that to continue.
So what stocks would you watch out for? Again, from a perspective of the fact that while TCS is such a large behemoth that it's difficult for it to come out with blockbuster numbers, but what would you watch out within the top 5? And then if anything that you're watching out in the mid-cap space?
So I think, see, while these are large stocks, okay, but because they are so well followed and well tracked, even a little bit of a surprise does result in significant moves in the stocks, as we have seen over the past many quarters, right? And given the fact that they are under-owned, okay, and like you have data, domestics clearly under-owned, etc.
Yeah.
So to that extent, yes, a surprise can result in a reaction.
Right.
Okay, particularly given the level of ownership. So I think the key thing which people will be watching out for is the top line.
Sure.
Okay, so top line and combined with management's commentary about the outlook, that I think will be the single most important thing to look out for. And then the second thing is how they really hold margins, because this quarter is a tricky one. You have rupee appreciation, which has not been the case for I don't know how long, many quarters.
True.
You have visa costs, and in some companies like TCS, for example, you will possibly have wage hikes also.
No, so which one would you watch out for, Surendra? Top 5, which is the one that you would watch out for? Mid-cap space, which is the company that you would watch out for?
So I think it's difficult to say, because
I'm not asking you which will surprise positively. I'm just asking which is the commentary that you want to hear the most, or which is the, from that perspective.
I think from a sector perspective, it's always TCS and Infosys.
Okay, fine.
Right, because they are the ones, the bellwether stocks, and who kind of determine the direction of the sector goes.
Okay.
And I think if the commentary is a little different, it will put investors in a further difficult kind of a position. So we'll really need to watch out for that.
But is it time you think that there is more traction in mid-cap IT stocks currently? Because I've been reading, like I don't know whether you cover it or no, but Saskin came out with its annual report and they came out with that 5 into 5 vision. The counter is doing well. Some of these mid-caps have been clearly outperforming, while Infosys and TCS, the public confidence is not there because IT clearly has been underperforming. Do you think that it's time to shift? Firstly, do you think it's time to allocate a little bit of more portfolio to the mid-cap IT stocks, and anything that you like in the mid-cap IT stocks?
So let's step back a little bit, okay. So if you look at most of the mid-cap companies, and particularly the ones we cover, okay, which are names like Mindtree, Persistent, L&T, Infotech. Again, these are businesses which have a mix, which also has a significant amount of traditional services, okay. So to that extent, they will also be impacted by similar kind of changes which the IT market is going through, okay. So, and if you look at some of the companies that I am talking of, they have had a fairly difficult last 12, 18 months. Okay, so again, out of our coverage, there could always be stocks which may not have as much of a traditional business and they may do better. So difficult for me to really comment on that part of the market. But at least most of the mid caps, when we look at them, which are businesses which are similar to the large caps, I think they'll continue to see very similar challenges. Now, you could always have that odd quarter where somebody does well, etc. But if you take a 2-year view, most of them have kind of gone through similar kind of challenges. Sure.
Paucity of time. So one question on financials, and then I know we promised you no rapid fires. We won't do a rapid fire, but we'll just ask you for each of your top preferences. But one question on financials, can't ignore that. NBFCs, SOEs and private banks. What would you expect? Each of these.
So I think, see, from a private bank, if you look at the retail focused ones, they have been kind of very steady. Okay, and one of them just reported, etc. But so they have been steady performance, and that is what the expectation is, that the steady performance continues. Okay, on the corporate focused lenders on the private side, I think it's still a tough environment, particularly on the asset quality side. Okay, so the credit costs are still elevated, etc. Okay, so it's somewhere in the middle. And then the SOEs obviously are facing challenges. So from a number perspective, again, it may differ across different banks given the base of last year, etc. But as a pack, the environment is still pretty challenging.
Prashant, what about your pecking order in the pharma space among the large caps and among the mid caps? What are you recommending clients?
Okay, so the 3 stocks we like the most are Aurobindo, Cipla and Biocon. And if you look at them, Cipla and Biocon have very limited exposure to the business which is facing the most challenge, and they probably have the better, I mean, they have a pipeline that could roll out. So they map very well in terms of pipeline optionality versus risk to the underlying US business. Aurobindo, in our view, is a business which is possibly best structured to ride through this price erosion or competitive intensity phase that you're seeing in the US, simply because it's a very widespread business, very limited concentration, and a company which enjoys significant cost advantage over most of their peers because of their backward integration. So these are the three names that we like the most on the pharmaceutical side. So Cipla is obviously large cap there, Aurobindo is a large cap, Biocon among the mid cap.
What about Sun and Lupin? Do you think that the pricing pressure will continue to impact these stocks even further?
See, pricing pressure will be there for every company which is there in the US. I think the issue with some of the larger companies, especially Sun, Lupin, even Dr. Reddy's to some extent, is they still have what we call pockets of supernormal pricing in the base business.
Sure.
So where you could see a step down in pricing, in market share, whenever competition comes in. Now the challenge is that you can model a certain erosion curve in these products, but it's very difficult to predict how fast that erosion happens, or whether you've got the pace of erosion right. So we try to do our best in terms of modeling, but the challenge is that the confidence in, okay, when we assume that a product will erode by X% over the next 2 years, will it be a bit more than that? Will it happen sooner than that? That's a bit difficult to say in this scenario where approvals are coming a lot faster than they used to be in the past. So that's the challenge they will face. I think from a pipeline standpoint, most of these companies have very good pipelines. It's the base that needs to first reset before you can get a bit more confident on their earnings.
Saurabh, you're watching out for all downstream. I know you mentioned that HPCL is your favorite. Anything else that people should watch out for this quarter?
As I said, I think some of the gas companies could do well. So gas distribution like IGL, for instance, a stronger rupee benefits them. So you could see an improvement in margins for them quarter on quarter. Reliance is always good to watch in terms of their commentary, in terms of their guidance on project timelines, etc.
Right. Okay. And watch out for the OMCs, particularly if there is a small OMCs, positive surprise, honestly, you might see a reaction.
We've seen underperformance, as Surendra said, going into results. Sometimes,
except the last 2 days, HPCL individually.
But that's event related.
No, but what do you make of that event? If in case, let's say there is this merger that happens, probably it could be a merger, could be an acquisition. If I'm an ONGC shareholder or I'm an HPCL shareholder and I don't know what's happening, so what scenario will play out? What is better for which shareholder here?
I mean, see, that's always a tough one until you know what the structure is, what the reports
You think it's a good move to do this?
So what they're talking about is a subsidiary structure, which involves not a pure merger. So HPCL does not merge into ONGC, but it just, the government stake is transferred to ONGC, which is honestly far less disruptive than an actual merger. So what we understand is HPCL could continue to, maintain its identity as such. The brand would continue. So less disruptive, so probably easier to get through in terms of approvals. Valuations are key. Minorities in an HPCL, for instance, might want to see if there is an open offer being made, because this is a transfer of a 51% stake. The legal opinion on that we are still not sure about. So there are still quite a few questions unanswered. But if this happens so for instance an HPCL, we still have a fair bit of upside to our target price. So if there is any independent valuation, which is what is being spoken about, and you go about determining a fair value, there is always maybe scope for upside for HPCL. But we really need to track what's really going to go on that.
Sure,
just on the quarter.
Go ahead.
Yeah, just on the quarter, I mean, the swing in earnings can actually, because inventory gains, losses, you might tend to get the direction right, but the quantum you might over or underestimate, that can actually have a big swing on profits, especially when expectations are fairly low.
And Aditya also tracks media, and since we being a media organization, we are very interested to know what can we expect from the big one and what's the outlook for the media sector.
So I think in media also, to some extent, the whole destocking impact has played out indirectly, because let's say advertising, the month of June was definitely a subdued month for a lot of the TV broadcasters, especially with higher exposure to the consumer-linked businesses, right? Where essentially, because there was a bit of a destocking impact, these guys have tactically pulled back on advertising spends, which we think is a temporary thing and should definitely come back as soon as restocking comes through. Interestingly, the impact is higher on the TV broadcasters than say print and in cinema advertising and the other subsectors where I guess the exposure to consumer is lower.
So what earnings would you watch out for very quickly before I ask in the final question to Surendra? Any earnings that you watch out for?
I think it's a really tough one here because the quantum of the destocking will determine the final impact on the volume numbers.
Sure.
I think what a lot of companies are also doing, and which is important, is they're also working on trying to improve the direct distribution.
Sure.
Trying to either increase the number of outlets that they're servicing better. So I think it brings in efficiency in the system, and you also kind of reduce the overall dependence on the wholesale channel, which is being impacted. And interestingly, from a longer term perspective, it also helps the product mix that a particular company has, because a wholesaler typically sells only what sells, whereas you're able to sell some of your premium products, or you're able to sell some of the more specialized innovation that you're doing through a direct channel.
Will IPL have an impact on any of the companies? Is it a big impact now, or now it's totally subdued?
I mean, I think directly speaking, Sun TV will have a clear impact on IPL, right? Because they own a franchise, and this is the quarter of the IPL, so it is definitely a swing factor. And for them, I think particularly what is important is this might be the last year of losses on IPL for Sun TV, because this is the 10th season. And from next year onwards, these companies, instead of paying a fixed fee, move to a revenue share agreement. So I think from an EBITDA margin perspective, you could actually start seeing a much better number on account of, to the extent of the IPL losses moving to profits.
Oh, that's good. They should be happy. Okay, final thoughts. We also have a question. I don't know if you want to answer. Any of you guys want to take it before we get in the final question in from Surendra? But there is a question on the view on any of you have, or Surendra, if you have, on the recent listings. I mean, all of them are going berserk, be it AU, be it CDSL, or be it Avenue Supermarkets ever since it's listed. Any thoughts on any of these? The question is for CDSL, but any of these, if you want to take a shot.
We really can't comment on what we don't cover at this point.
So let's leave that out. So finally, from this quarter's perspective, Surendra, we've covered a lot of major spaces, themes, sectors. You've started off this conversation saying that watch out for maybe some disappointments which might be transient in nature on an overall earnings picture. What else should people keep in mind while they look at this quarter's numbers?
No, I think, so if you look at from an earnings perspective, and I firmly believe that you need earnings support if the market really needs to move up from here, right? So what can be the big variables which drive earnings, say, over the next 12-15 months, right? So financials is the largest sector. There you really need to watch out for some of this stressed asset resolution and credit costs, how they move, because that can really provide a leg up,
right,
or leg down, depending on how it plays out to earnings next year.
Yeah.
Okay, so that's something which is very important to watch out for. Commodities generally have a huge swing factor when it comes to earnings YOY, right? So metals, and again some of what Saurabh covers, we really need to watch out for those swings in earnings. Okay, so I think those are things which I would watch out for, and then I think what management say on the GST related transition. And just one thing before that, I think when we spoke about GST transition, we kept on talking about destocking and just the revenue line. There is a cost angle also, right? Firstly, there is operating leverage playing in. Secondly, people might have pushed inventory, and there would have been discounting to kind of get rid of that inventory. And then the third thing is, in some cases we have seen where companies have gone out to the trade and said that we will take care of you, right?
Yeah.
So that also will have a P&L impact. So this quarter will have all of that, but then what companies say about that, what is the kind of recurring growth, and then what kind of margins are they expecting. So I think those are 3 or 4 things which we really need to look at to get a handle on what kind of earnings growth can the market deliver in the rest of this year, and then the outlook for FY19, which is where I think you started by saying that will the market look through it. I think that comfort is very important if the market has to really look through it.
What are the positives? Which sectors do you think that will surprise positively this thing? We spoke about oil, we spoke about pharma, there is pressure, FMCG could have, but which is the space that you feel that could be the big outperformer as far as earnings is concerned?
It's very difficult to really say earnings surprise,
2, 3,
because the reason is why we put out estimate is what we think at this point.
Where are you anti-consensus? Let's put it that
Yeah, so on earnings it's very difficult because I have not really seen too many people come out with very specific earnings forecasts. But if you look at the note, there are some specific pockets which we are calling out. Okay, so for example, OMC, Saurabh already spoke about, because the stocks have already underperformed, right? Glenmark, Prashant already spoke about it, right? So where, so those kind of
a bunch of others. There is Havells, there is Ambuja ACC, I believe SAIL. You guys have some thoughts
so
out here.
I really don't want to comment on specific stocks here,
Right.
but if you look, there is a common theme. If a stock has already underperformed a lot, okay, and it's a business which we are convinced about medium term, then it generally figures in what can go up.
Sure.
And on the other side, something which is very expensive, on valuations, expectations are high, and we think that the challenges can be there for a bit, that's on the negative side. So that's the common thing. I really don't want to talk very
Perfectly
specific
acceptable.
stocks.
You guys have already spoken a lot on almost all things that people would want to hear. And it's been a pleasure having you. We're knocking on the doors of 10,000. I fervently hope, or we fervently hope, that your apprehensions about this being a bad quarter are wrong. It's just great for the market. So let's hope that it does turn out that way. And we hope to do this more often with you guys. It's been a pleasure having all of you. Thank you so much for taking the time out. And viewers, thank you for joining in on Bloomberg Quint and listening out to the Citi think tank as they laid out their Q1 expectations.